3, 2, 1. Und wir sind live.
Yeah, welcome everybody for this webinar where we will talk about digital assets, right? Digital assets have been out there since a couple of years now. With digital assets, we can mean potentially crypto assets, but we also include security tokens, for example. Security tokens are also out there since a couple of years, but so far, I think nobody has found the holy grail in the meaning that security tokens are widely traded, right? We have very excellent prototypes, very excellent projects here and there, especially in Switzerland. But also, I think it will just take more time until the laws are being in place, until the laws are understood, and until the laws are being used, right? And therefore, I think it's a very hot topic to discuss digital assets right now, and also where we are going to in the future, including crypto assets, but also primarily tokenized assets. I think with this, let's directly ask everybody here in the room to introduce himself. Maybe Peter, would you like to start presenting yourself and your company, and also providing a little bit of context such that the audience is basically getting a glimpse about who is speaking here, you know, what type of person, what type of company is speaking here. You're from Switzerland. I guess you're sitting in Zurich right now. Maybe you're also in holiday, who knows, but it looks like Switzerland. But over to you, Peter. Please present yourself.
Thank you very much, Philips, and thank you very much for having me. Right, actually home office, right? Not holiday, not Zurich, somewhere in Switzerland. But I'm CEO and founder of Custodigit. Custodigit is a provider, tech provider of a digital asset platforms in order to enable regulated financial service providers to offer digital asset services to banks or to their customers, I have to say.
Excellent. Thanks much. One of custody providers from Switzerland, but you're also providing your services elsewhere in Europe, right? Yes. Okay, maybe over to you, Sven. Would you like to present yourself and your company briefly?
Yes, thank you. And also thank you for having me. So I work in State Street Digital. We are a business division of State Street. It's a global custodian. We also have a large asset management franchise. Within State Street Digital, we're really looking to build digital asset service capabilities for either crypto, security tokens, as Philip you mentioned, but also CBDC, and generally using, if you want, disruptive technology to improve services for asset managers.
Excellent. And now I need to change my camera here. So excellent. State Street is, of course, well known, coming from the US, also having a huge facilities and operations over here in Europe, right? Let's then over to you, Andreas. Would you also like to please present yourself briefly, even though
yes, thank you very much, Philip.
Yeah.
Yes, I'm Andreas. I work for Commerce Business Consulting. That's the in-house consultancy of Commerzbank, and we deal with the crypto and DLT topic since 2015 a lot, and we are one of the part of the DLT lab that's dealing with all the topics in Commerzbank. So I don't think that I have to tell someone about Commerzbank. I'm responsible for all the crypto-related topics in the Commerzbank and the DLT lab.
Okay, excellent. The Commerzbank in Germany is having done in the last years, you know, many prototypes, very often involving digital assets, right? Not so much crypto assets, but very often digital assets. And I think with this, let's directly jump into the topic, asking maybe Peter to get started. What are digital assets in your opinion? And then maybe Sven and Andreas, please also jump in to add more details after Peter has done a first draft of a categorization.
Okay, let's try to categorize that, right? It also depends always the categorization a little bit on the current regulation and how they see it. We normally structure digital assets, right? First of all, it's just a digital code. But from a more legal perspective, we differentiate the different tokens, in native tokens, right? That's where you don't have a direct counterparty. Bitcoin is quite a good example for that. We do then separate two other categories. One is a counterparty tokens. That's where you have a right, maybe easy right. You have the right to use the platform or the smart contract capabilities. And then we do have ownership tokens, where you really have a digital representation of an ownership of an asset itself.
Okay.
That's how we normally categorize it.
Okay, and if you are talking about, say, equity tokens, for example, like simply taking a legal entity, tokenizing its shares and so on, how would you put this into your category?
In our category, right, that would be an ownership token.
Because I would own basically property in this legal entity, right?
Yes, you are the owner of this equity, right?
Okay, excellent. Sven, would you like to add some arguments here?
Obviously, I agree with that assessment. I just would add maybe a different perspective. So, because as a global custodian, we obviously engage in, I think, way over 100 markets in terms of providing, securities administration services. And obviously, most of the assets we hold today are already in a way in a electronic and therefore in a digital format. So there's always this question of what is so different about comparing, if you want, a share that you hold in electronic book entry form through the chain of intermediaries, the CSD, versus like digital assets that we are talking here about, because both in a sense are a digital representation of value. So, and what Peter just mentioned, I think there were some few important buzzwords that for me really call out the difference. Is the aspect of the smart contract. You can really embed properties, additional properties of an asset into the asset, as opposed to having a sequential process. And that is, for me, one of the aspects that makes it unique. Potentially also the decentralized nature of that network that we're talking about. And then we can really agree on a shared source of truth. And that is something that in today's setup, we don't really have. Every bank, every intermediary has own interpretation of the truth. And then we're spending time and effort to reconcile. And we do that in order to make sure that assets are safe and secure. And so through the, if you want, the blockchain version of a digital asset, there's the hope to have a more efficient and better way of conducting business than we can do today. But for me, that's quite important. People sometimes think like we're shuffling paper around all day long, and that's not really how we operate.
Excellent. Andreas, would you like to add points here?
I totally agree to both of the guys, and yes, I just want to add another perspective. We add another category. It's electronical securities. So if you talk about cryptocurrencies, we talk about Bitcoin, Ether, etc. If you talk about tokenized assets, we're talking about NFTs, for example, and the electronical securities are just another category in our view, just to deal with another technology and handling of the assets itself. So but the categories that was mentioned before is just fine.
Excellent. Let me just to avoid confusion of the audience. So what exactly, maybe Peter, would you say is the difference between a legacy securities, for example, a stock, how it is traded today, and a tokenized assets, which could potentially be a security token in the future, right? So what's the difference between let's call it a stock and equity thing between in the legacy infrastructure as it is right now and in the future DLT infrastructure, to really get this distinction clear, right? Yes, it's the DLT as the underlying technology, but what are the benefits? Why would we like to have it? Or Sven or Andreas, please, whoever wants to say something.
Yeah, let's make that a joint effort, right? Because it's an interesting question and also quite a complex question. As Sven mentioned before, today it's happening also electronically, but not on DLT rails. With DLT rails, right, I see from my perspective the benefits we can actually gain thanks to the DLT technology. What was mentioned by Sven, right? That's we do have the golden truth or the golden copy, which is representing the truth, and reconciliation should not be needed anymore. I guess that's from a process efficiency point of view an important one. But I would also say, right, fractionalization, which is another feature we can actually apply thanks to the DLT technology, meaning that we can make, for example, very expensive equities or shares accessible to a wider investors population. That would be another benefit of it. And also the transferability, right? If you want to transfer stocks right now or equities, it's quite a cumbersome process if you have done it once from one bank or from one deposit to another deposit. I have done that a couple of times. It's really a cumbersome process. And thanks to the DLT capabilities, that's much easier to do. In the end, right, you have actually on the process side, you have process efficiencies, synergies you can actually get, and on the product side itself, you do have certain product features like fractionalization, or also bring new asset classes in and make it accessible to investors, which are not able to do with the current rails we have. That's maybe to kick it off.
Yes, I have one point to add, but Sven and Andreas, would you like to add points?
I guess the legal perspective is very important on that. So, especially for us in Germany, if you look at the securities law, then in any time, if a security or an asset qualifies as a security from a legal perspective, we have to deal it that way, and we do not have the freedom to deal it with like a Bitcoin or so. So there's a bit the difference how to handle that asset. I think this is a very important fact.
Excellent. Sven, any points?
Yeah, so for me, the real impact by applying DLT is really this different market structure that we could possibly create. Because I think it's, in my opinion, wrong to sort of say this. Basically, you take a binary view. There's legacy on one hand side, and there's DLT blockchain land on the other side. They cross over already. There's a lot to learn. So if you think about the concept of a trustless network and DLT, we actually also using now that concept when we design our architecture. A lot of other banks are doing that you basically treat each and every application as a trustless infrastructure to make sure that's how they communicate with each other. So that there's crossover also in terms of, for instance, instant payments. What I find quite important is, again, that idea that through blockchain, you can create a dynamic, synchronized database that allows you to speed up processes and be more efficient. Today, the issue in a sense is that because we have different operating hours and time zones and not 24/7 processing, there are different states, and you have a trading position, and you have a settled position, and you have a middle office position, and these reconcile at some stage, but at a given moment in time, there may be differences, and that can create operational risk, credit risk. And through blockchain, by taking this all together and basically taking a business view in terms of we agree through the technology on a common business process, you can remove these risks. And I think that's quite important today. Basically, I'm sending a message and I'm asking you as my provider to do something, and then I'm waiting for your response. Through blockchain, through cryptography, I can go into the network, I can verify myself whether a certain asset has been settled or not, and what the state of the database is. And that takes out all of that dependency that we have of each other. And for me, that's the interesting thing is technology is the enabler, but then it's not just like a faster horse. It is really a car that we're building that is then therefore a different as an operating model than what we're used to today.
May I ask a question as well to
Yes.
Sven from my side?
Of course, please.
Sven, you actually mentioned a very important point, and that was the settlement, right? Where at least from my perspective, still do have the hope that the settlement also in a regulated environment, we can speed up thanks to the DLT technology. Question from my side would be, on a bank's perspective, did you analyze maybe what the financial impact would be to the balance sheet of a bank thanks to faster settlement cycles?
Yeah, it's being Yeah, just go ahead and then I can add my comments.
Sorry, of course, yes, we did. So I think we have a lot of smaller counterparty risks. So I think on the balance sheet, it reduces the risk massive. In so far, we would like to implement it as fast as we can. So I guess all the DLT infrastructures that we have that proven years before, we will see in the future in a much larger way. So I guess if you see the benefits that you mentioned right before, reducing the settlement times, reducing all the process costs, etc., we will see new infrastructures on the, I guess, a bit more on the consortia basis, because why do we need own infrastructure internally? So it's always the same. We should share a big one for every market participant, so that we can focus on the details where all of the market participants have a little, let's say, differentiation feature, not the thing what everybody has to do for its own, but the same way. That doesn't make any sense. So we need one platform, or obviously a consortia of platforms, and then use it for all processes in the same way. I guess this enables us to cut the costs and increase the process speed as good as we can. So yeah, there are a lot of benefits.
I would agree. I would like to add one more point or highlight this point. It has been mentioned previously. I think that the true benefit for assets on blockchain systems comes when you also have money on blockchain, such that the purchase process called DVP process, delivery versus payment, in case this would then be dramatically more efficient, because it would mean that you have one infrastructure, as Andrea said, but on this DLT infrastructure, you have stocks, shares, all kinds of securities, and you have money, that would be the euro and the US dollar. You have all there, because then trading would simply take place by a smart contract, such that you do not need to have clearing houses anymore. And with the clearing houses, you take away the counterparty risks, you gain efficiency, you reduce costs, you don't need insurances, and so on. That's, in my mind, the holy grail, also being proven by decentralized finance. That's exactly why decentralized finance works, right? Because you have settlement and trading of assets taking place without clearing houses at a much more high efficiency degree, because all kinds of assets are there and smart contracts are taking over the function of the clearing houses. This is something which is very often forgotten a little bit, because people also like the ECB, they are thinking in their domain. ECB's domain is money. They don't really care about what's being done with the money. That's why they care about their domain. But blockchain is about crossing over of many domains. In this case, for example, securities on the one hand side, money on the other hand side, and then smart contracts can take action and replace clearing houses. I think that's, but it's a far-fetched vision. You know, it cannot come overnight. The euro is not on chain, but this would in my mind reveal the most significant benefits for securities on chain. But you are right, you know, you can fractionalize things, you can trade it more efficient, you can get costs down, you can save the balance sheet of banks and so on. There are many benefits which also should be mentioned, right? Last point for this very early chapter of this discussion, right? The word digital securities is very often mentioned in Germany, right? What's your take on this? It's basically something like a security, could be equity or debt capital, something like this, running on a blockchain system. It most probably, right? It could also be another infrastructure despite blockchain, but largely digital securities can be said that it's a share or a debt instrument running on a DLT infrastructure. Am I right here, or would you disagree? Just to clarify these words which are out there.
I absolutely agree.
Maybe for context. So as you said, that is a big buzzword in Germany. It's actually quite an exciting development. Also, I look at this globally, there's very few markets which have been sort of, if you want, so proactive in terms of creating a legal framework that allows the creation of electronic securities. And we had them in Germany before, but they were always, if you want, outside the normal custody laws, and therefore from an investor perspective, in particular regulated asset manager, there was some hesitation to invest in something that doesn't have the same legal standing as an equity listed on the exchange. And so that's being resolved. I think there is more work to do, from a European perspective, how maybe that concept that you have in Germany could be something that, is more widely replicated and therefore available in other jurisdictions, but also extending it. At the moment, the possibility to create these electronic securities using blockchains is somewhat limited to non-negotiable instruments. So that's the lingo, i.e. stuff that is not on the stock exchange. And that is a restriction of the CSDR regulation in Europe, which requires registration within the CSD. And I think that is something, what we just described, the conversation. I think everyone agrees to the possibilities, but then there's a bit of a hesitation to say how radical do we want to be in terms of changing the market. And I think in order to really push the benefit of DLT, you need to have a decentralized marketplace, which also then means you need to allow more of that competition and in a way move away from this idea of a CSD in each market. And I think we're not there yet. So at the moment Germany has gone, I think, as far as it can in terms of where the flexibility exists for non-listed securities. But it's still, with that legal change, it will not be possible right now to then tokenize as a native security token a listed instrument. And I think that's a shame and the potential for the future.
Am I right that for a listed stock that you still need a CSD in the process, even with the new law?
Unfortunately, it's true.
Is this different in Switzerland, Peter?
According to my understanding, I'm not so sure about the listed one, but on equity itself, right, non-listed at least, you don't need, right? That's doable without. But also my understanding is, right, that the European Commission is now initiated this MiCA regulation, which should or tries to set the standard for the European Union, which should come in place somewhere 2024. At least that's how I recall the timeline.
Well, MiCA will actually come into force end of next year, most probably. It comes much earlier, but there are other parts of this scheme, the DLT regime, pilot regime, and so on, other things, which might take a little bit longer, right? But let's make the discussion now a little bit more concrete. Peter, what are your favorite digital assets, to really bring also some examples here, not just the generic description and definition. What are your favorite digital assets?
So personally favorite, right? Or let's do it the other way around. We are currently in a project where we actually do the tokenization of digital arts. We have been spoken on the crypto conference about this. That's, from my perspective, really an interesting case because it's also going live. And thanks to that, you have quite some benefits, right? Fractionalization, we have spoken about it, but also it can be used more easily as a collateral, but also in case of a death, right? The whole process could be set differently that if you have to divide the estate, that you can actually do that much more efficient on a digital representation of that art object than in reality. That's one interesting movement I see and where I see a future for it. But also the whole DeFi sector with all its possibilities, it's really interesting to me and also to Custodigi.
Absolutely. Sounds good. Is this, by the way, the project which is for purchase at the Signum Bank? Is it this project?
No, it's not, but unfortunately, I'm not allowed to disclose it.
Okay. So because it's interesting, because apparently then there are multiple projects coming to real life because there's also an art thing.
Yes, that's correct.
Okay. Interesting to see this. What's your favorite digital asset, Sven and Andreas?
If I make a start, maybe, so my favorite, I don't know, but so I personally quite interested in assets where they not just like digital and therefore a bit more efficient, but they create properties that we are not used to. So stablecoin for me, for instance, one of those areas, because in a way it's similar to money market fund in terms of trying to preserve a stable NAV, but then you create a secondary market which doesn't really exist for money market funds today. So you're almost allowing to securitize instrument and then change somewhat the properties. If you look back, when was it, like 10, 15 years ago or something, maybe even longer, when people started to do dividend stripping, you could trade the interest of a bond separately from the underlying. So it's similar now that we are taking some of these techniques that come through the application of blockchain. And I think that's quite interesting because it gives you a different way of trading risk that through traditional assets wasn't possible. So therefore, stablecoin, digital cash as an example of that trend is quite exciting to me.
So when I talk about exciting digital assets, then it's definitely tokenized real estate, art, or real values. Why? We see Bitcoin and Co. Since years, so everybody knows what the asset class is. All the classical financial instruments. But what is really new is the opportunity to buy a little piece of a Picasso, for example. So in my life, I guess I cannot afford the complete painting, but maybe a little square millimeter or centimeter, I don't know. And the opportunity to put it in my portfolio and to have a little portfolio diversification, on this way of maybe in infrastructure projects, or maybe sell them cars or whatever. I think this is a really exciting opportunity to step into a complete new field that is very interesting for our customers as well. So we see increasing interest in this field, and I think you can see in the investment of Deutsche Börse and Commerzbank in 360X in a platform to build a marketplace for these assets. That is, I think there's a big future for this topic. I think this is really amazing from a use case perspective.
Yeah, I agree. So my favorite digital asset, it depends on the definition. If you're including Bitcoin in digital assets, then Bitcoin is my digital favorite asset. If you're excluding cryptocurrencies, then my favorite digital asset is simply the very boring share or stock on a blockchain system. That would be an equity token, right? That's my favorite, but it's basically not possible in Germany right now, but it's possible in Switzerland. Okay, let's now move on to the next topic. Why in this entire ecosystem and in this entire process and what we are talking about, why is custody so important, Peter? And also, why is custody not a commodity, as very, very often people are saying it is, right? Why is custody important, and why is it more than simply a commodity?
Actually, that's a good question, right? So with the DLT, right, what we really have to protect and what gives you access to the funds or to the rights or to the ownership in the end is just a binary code, as we call it, the private key, right? And if you are able, especially in public chains, if you're able to somehow get hold of this public key, you do have access. You are then representing the owner of that fund. Meaning, just from a technical perspective, right, it's a little bit a new discipline where you have to protect those private keys against all the technical, physical attacks or risk vectors in that. And the industry now, over the last 10 years, right, has really spent a lot of time, a lot of energy in order to make sure that those private keys are not getting stolen or are not getting lost. So that's what we have done in the last 10 years. When you are saying it's not commoditized, right, a commodity right now, I agree. Will it get a commodity in a couple of years? I believe so, right? We also have seen that from a regulated business service, the custodian business services. It started as not commodity, and over the time, It got the commodity, and we also have seen there a concentration of the assets to a few players. And if I'm not mistaken, we have one of the big custodians actually in the call in the more traditional world. That's my view. So it will get the commodity in the future. That's my strong belief.
Yeah, makes very okay. Perfectly agree, and makes very much sense. Custody is very important. That's why you also see a couple of custody providers and custodians around the world really increasing their valuation and also having a very significant value, right? Yeah, let's basically move on to the next section here. What are key drivers for custody, and why do you think are crypto custodians becoming more and more important in the future? Because of course, it will be about the custody of digital assets, but in the future, there might also be relevant the custody of voting rights, the custody of identities, and so on. So please elaborate also a little bit more on these questions. Peter.
Oh, okay, thank you very much. Yes, right. As you mentioned before, what we see or let's make a step back, right? The whole digital assets and also the crypto market, they are quite small at the moment in comparison with the traditional financial markets. But we see quite an increase in assets under management in general, meaning also this function provided to the financial market is getting more and more important as more funds are in custody with different providers. So that's why it's an important function. And also, as we discussed before, from a technical perspective, there will be a lot of funds in there. There's quite some risk, which we have to mitigate on a technical, but also on an operational, and in the end, also on a regulatory level. That's why this function is getting more and more important, because much more funds and assets under management will be in custodial services. We're really moving, in my opinion, right, from a self-custody perspective, where the whole digital asset market started, to a more centralized custodian infrastructure. And my belief is in the future, we will have a few but very big custodians who will have a lot of assets under management, and therefore they providing an important function to the market, and they need to protect those funds.
Okay, and what would you recommend to small investors? Should they go to some kind of exchange, to some kind of custodian? Should they do self-custody? And if so, how should they do it? Any recommendations for small retail investors? This has, by the way, been a question from the audience coming in via YouTube.
Yes, I would say there's not one answer to that, right? It really depends also on the people itself. So you do have tech-savvy retail investors out there who know how to handle, let's say, for example, a Ledger Nano or other solution in order to self-custody. For maybe not so tech-savvy users, I would recommend that they actually open accounts with banks who are providing access to digital assets, so that they are taking over the custodial function for them.
Okay, and any additions by you, Andreas, or by you, Sven, about importance of custody, and also some recommendations for small retail investors?
So totally agree to Peter. So I guess one of the major points is a question of trust. So who do you trust? Do you trust your bank? Then you probably put all your assets to the bank. And obviously, it's not the question of technology; it's the question of convenience and customer experience. So a client that have all the assets on one wallet, one provider, there's no reason to change that if there's no point from a customer experience perspective. So if there's no issue and everything is fine, everything should be in one place. That's the simplest thing. The question is, how can banks provide that? So I guess trust is the one thing. Banking is a trustful business for itself, but if you think about infrastructure and the client base, your bank have all the infrastructure that provide a trust mechanism like KYC, like the compliance topics. You have all the equity in the background of a bank, and definitely one of the last things. Banks are regulated. They do not handle or play. Let's say in a shady room. So we are regulated and we have to be clean. So it's just everything is okay. There's no issue or should be no issue. So clients should be put all the assets to these places.
Sounds good. Basically, another question I would have from the audience is the following. Can we actually trust crypto providers, custodians, and can we trust crypto exchanges in a couple of countries such that basically retail investors and also professional investors can onboard to them, right? In the past, we had very often crypto exchanges from Asia and from elsewhere, which did not meet the regulatory requirements over here in Europe. So there was good reasons to believe that these crypto exchanges are not very IT secure. We have also seen this proven by many hacker attacks, right? Once now regulation is coming, and for example, in Germany, we do have crypto regulation now. And once companies are complying with this regulation, for example, Nuri, Börse Stuttgart, and also Coinbase and a couple of others, if they are complying with the regulation, can we assume as investors that they are safe? Yeah, that's the question also, once again, coming from the audience. Maybe Sven, would you like to add some details here as a regulated company, as a large regulated company?
Yeah. Maybe to the extent that, this is a, there's a problem that, challenge that exists also for the traditional industry. So as a global custodian, we tend to work with a network of correspondent banks or sub-custodians that we will pick in various markets. And there's a whole industry around how you can offset, particularly under US law, your duty of care to pick a provider that is sound, operational, secure, etc. And in today's, if you want, traditional security space, there's somewhat a template that you're looking out for. We have been doing custody for 200 years, so you know what you're looking for, but also you would do a review around the regulatory requirements. Can you segregate assets? What's the legal protection for an investor, etc.? And a lot of these things don't really exist in crypto, or somewhat unclear or interpreted differently across the industry. So at the moment, I think that's quite a challenge to say, how can you be sure that a particular model is appropriate, particularly when regulators have also expressed quite different preference. So in Japan, a regulator would say the only good way of providing crypto safekeeping is by using cold storage models, and in other markets, particularly for instance Germany, is much more flexible in saying it's, it has to be robust and secure, and then it's up to the provider to pick the right model. And in a way, I like that in terms of the flexibility, because you don't want to enshrine too much, if you want, technical restrictions into the law. On the other side, it obviously creates a lot of uncertainty. So I think that will be an issue we talked about earlier around MiCA. So if you have a template like this, it's then easier. You could say, well, does a provider, do they operate in future under that MiCA regulation? Would they have the necessary licenses that would give you a level of comfort that in the absence of it, you don't have? So for me, that's quite key, that we're getting these kind of frameworks. And right now, I would say Europe with MiCA is really going from that perspective in the right direction, creating a framework. So you know that there's a minimum requirements would have to be met by those providers when you onboard them. But there's no global consistency, and that is somewhat a challenge even for institutional participants.
Yeah, excellent point. Anybody wants to add something here?
Yeah, in addition to that,
Yes.
regulation is really good, and I think in Germany we are on a good way. But I think you have always have a look on the provider themselves. So it's a difference to get to or to come to a startup. They maybe are good in a customer experience, but maybe do not have the financial background of a big financial institution. So you have to think about financial background as well. So if you make a decision of what provider is really safe, so what do you expect security from a security level? I guess no retail investor asks the question is how secure is it? Maybe 1 or 2% of the investors, because I guess not many people know the real the details of a security model, etc. So I think it's a part of the regulation, but I think it's a part of a feeling which provider is really safe and which provider you can trust.
Yeah,
everybody have to decide for its own.
Yeah, but luckily we do have now a regulation in Germany on this regard. So you can, in my mind, not from an investing perspective, but at least from an onboarding perspective to an exchange, you can now easily recommend Börse Stuttgart, Nuri, and Coinbase because they have gotten or are in the process of BaFin approval, right? Or would you disagree?
My personal view is right. The aim actually of regulation is the protection of the investor. That's the main goal in my understanding from a regulation point of view. And thanks to the regulation, you just mentioned it, Philip, in Germany, a couple of providers who are in the process of getting regulated. We do have already in Switzerland, for example, a few banks who provide digital asset or crypto services under a Swiss banking regulation. And thanks to that, right, they have really the goal to protect the investor or the customer from certain risks. So in my opinion, regulation is really the medium of transporting also the trust from those providers to the retail investors. And personal experience, right, with working with regulated financial service providers together, you also have then quite a lot of requirements on the technical side, meaning you need to be compliant to certain frameworks like SOC 2 or ISA 3402 type 2, which in the end then also reduces again the risks for the end customers. So in my opinion and my recommendation, I would always go for a regulated provider because by obligation, he has to protect the customer as good as he can.
Indeed, I agree here. Well, in my mind, in case people feel skilled enough that they want to do self-custody, I think you should allow this to them. But for those people who need protection, I think for them you need regulation inevitably. Otherwise, it's getting too shady, as we have seen in the past, partly, right? Anybody wants to add something here on this discussion about regulated intermediaries in the area of custody and exchanges? Okay, then let's move on to the next block where we talk about the markets and the banks. Maybe Andreas, question for you. How is the perception of the digital assets market right now from your perspective as a bank?
We have been looking for the market for some time, and the hype surrounding Bitcoin and NFTs are in the public are massive. So I think we have to get a step back. So if you compare the capitalization of the market volumes, then it's much lower than the classic financial markets. But we see an increasingly grow in the demand for all customer groups. So we think this is a growing market, and it's definitely there to stay.
Okay, and in which area do you think will it stay and develop, like digital assets in total, or would you identify specific segments which you find interesting? And Sven, I will ask you the same question, so you need to prepare for this question.
Okay, I guess cryptocurrencies are always there. So we see substantial volume in the markets in Bitcoin, Ethereum, etc. If you look at electronic securities for the new German law, then it will take, I guess, 2 or 3 years till the infrastructures are built up and get running. And then we see there substantial volume as well. if you have a look at tokenized assets like art, real estate, etc., it's a bit more complex. So we see here a bit a longer investment phase, but it's growing as well. But probably would be the third class that is growing big. You see right now a little offer in the market, but it's not at a big scale. So everybody can invest in a part of a painting, for example, or real estate, but it's not a massive way. So I think this will grow in the next 3 or 5 years. But that we think that it's a good idea, you can see in our investment in 360X. So I think it's a good idea to have a platform to get a bit a liquid secondary market and to enable our customers to trade in this assets.
Okay, excellent point. Sven, what about you? What is your perspective on the markets for digital assets, also coming from a bank?
Mm-hmm. Yeah, for me, crypto is a use case of the wider digital asset universe, and an important one. And so, for instance, recently we also announced that we, for instance, upgraded our trading technology, so you can trade crypto to crypto and fiat to crypto as on the technology side. So we have the capability in that system that we then make available to various marketplaces. And there's interest. It depends sometimes a little bit on the client segment. So, for instance, it's not unique. If I'm thinking about pension funds, for instance, my discussions I had so far, there's probably more hesitation in Europe for European pension funds to go into crypto. US more open-minded, and so depending on the area and the client segment, you find different, if you want, levels of enthusiasm, and that obviously will change over time. Then in terms of the bigger pie, or the bigger interest really is, I think, as we started off the conversation around using blockchain and digital assets as a concept for the wider asset universe, whether token, collateral, FX, transactions, what have you. And given regulatory constraints, I think in the sort of medium term, we're probably going to be seeing more in private securities, so as a function of regulation. So that's one of the areas we're looking at. And then the third piece, really digital cash in all shapes or forms. So one of the initiatives we are actively participating is called Finality, and that's really trying to develop a synthetic CBDC connecting to various central banks based on Ethereum blockchain technology, and allowing basically wholesale banks to do peer-to-peer payments using a decentralized network, and that's something that's no longer speculation. That will be with us, in a couple of months, and we'll start seeing some transactions being processed that way. So that's, I think, an interesting where the if you want to regulate financial market, where it will start to move a little away from just proof of concepts and starting to put some commercial services or make them available, and then see what the uptake is.
Okay, and so all of you would agree that digital assets for intermediaries and banks and so on are of strategic importance, right? So they should urgently start to invest in it, or at least deal with it somehow. Please let me know if you agree here, and also going a little bit more deeper here, what customer segments would you have in mind here? Is it primarily the retail market? Is it smaller professional investors? Is it large-scale institutional investors? So whom are we talking about here? For whom do you think will it be important, or is it important? Maybe once again, Sven and Andreas, to get started.
Mm-hmm. I think that's an important question. Our decision to actually launch this new division, State Street Digital, is a testament to the belief that you have to have a credible digital asset strategy if you are servicing institutional investors. So there's no doubt about this, and we have basically put this into action. In terms of the client segments, we as an organization, we are almost exclusively deal with institutional and wholesale participants. So I can't really give you a perspective of retail versus wholesale, but within that wholesale segments, it will depend a little bit on the status of or the regulatory status of these institutions. So if you look at crypto right now, I think we see most of the interest in so-called asset owners or smaller hedge funds, so they are somewhat outside the, if you want, asset management regulation framework, whilst a fund like a UCITS fund in Europe, etc., probably are starting to get interested in crypto, but we may probably initially see this more on the alternative fund side. So stuff that gets distributed to institutional investors and not retail investors. So there's a bit of a sort of a different path depending on to what extent. So we talked earlier about MiCA that regulates, if you want, the creation and of digital assets and the provision of services around that. Mm-hmm. So that's will be taken care of. And what's missing a little bit is then the investor side. Would there have to be changes to the asset management industry overall to then also allow these organizations to invest in digital assets more effectively? And at the moment, where we have changes like electronic securities, like in Germany, that makes it easier. That's an established legal framework. When it comes to crypto, I think there's a bit of uncertainty to what extent they can find their way into regulated portfolios.
Okay. And when do you think we will see significant volumes in these markets?
That is a good question. So I wish I had a crystal ball. We have our own assumptions. As I said, we think cash is a big enabler. You mentioned this also earlier. We've seen the same in crypto. Crypto, I think, could not have developed so successfully without stable coins, and we need an institutional form of stable coin to enable then also security tokens, or be it CBDC, whatever it is. I think these two markets work together, and so the sooner we have the ECB launching a digital euro, I think the faster the security token market will develop in Europe.
Interesting point. Maybe talking about volumes, Andreas, we all know that Commerzbank is very active in the DLT space, but primarily in the enterprise sector, right? That's also a question from the audience. Mm-hmm. Are you also planning to work in the area of crypto assets, maybe also offering services such as Nuri versus Stuttgart and others, or do you plan to simply focus on the enterprise domain?
Mm-hmm. I think we focus on every asset class which has a higher relevance for our customers. So we see the interest that is growing in the last years, and we're working on every product that has a high interest of our customers. So I think now is the time to write their own digital asset strategy and work on it, because if you miss that chance, then you lose an opportunity for the future. I guess we are heading to every development internally that is necessary to offer our clients a good product portfolio.
Okay, sounds promising. Let's see when this will hit the market. We know from Deutsche Bank that they are also working on this, but probably this will take quite some time over there.
Philip, may I ask a question?
Yes,
to Sven and Andreas again, which I'm really interested in. Right, you mentioned the different customer segment, especially more on the wholesale segment. My question would be, right, we see now ETP products, especially on the cryptocurrency side. And my question would be, do you see a difference regarding the preferences of those investors if they would really like to hold the tokens by themselves or through an intermediary? Or would be like synthetic products like an ETP sufficient for them? Did you find out some preferences there from your customers?
This is a really good question. So actually, a synthetic product would be work right now if it's available. So I guess we should offer maybe both.
Yeah. Maybe just to add, I mentioned earlier, so in Europe, you have, if you want, two fund types. You have UCITS, which are sort of more retail and can be invested into by retail investors. And then you have specialized alternative funds, IFs, that have a broader investment spectrum. So they basically can buy everything. The issue is at the moment, would a crypto assets be an eligible investment for UCITS funds? And I think there's some question whether that's the case, but a ETP, because it's a security, probably would be eligible. So basically they they can be a vehicle for a UCITS funds to invest in these type of assets when buying crypto directly may be an avenue that is not available right now. For IFE, these restrictions may not necessarily apply in the same instance. If I look at our clients globally, some of them also invest in these type of ETP instruments, but I would say the demand comes more from European investors as opposed to non-European, either US or APAC. So we have to see whether that very buoyant European ETP segment will, if you want, be copied in other markets. As you know, in the US, there has been ongoing discussions around launching exchange-traded funds, ETFs for crypto assets. So we have to see whether, if you want, once the regulators would allow some of these funds to be created, whether we would then see a similar pattern like in Europe.
Very interesting point to be discussed now and also in the future. Yeah, we are soon coming to an end. If clients are looking for a custody provider, right, Peter, what are they looking for? Are they looking for like a full-fledged solution? Are they looking for specific solutions to fit specifically in their existing system? How important is the connection to existing IT infrastructures, right? So what are they looking for?
So thank you for that question, right? We discussed a couple of points already during the discussions. Security, that's I wouldn't say it's a feature, it's a hygiene already. You need to be really able to fulfill the highest security standards. That's always an important point. But it also depends, right, from the customer itself, or in our case, from the bank itself. And there you do also have the strategic dimension that the banks are looking for. Some are more buy-oriented, right? They would like to have a fully fledged platform with business process functionality already implemented in such a platform. Others tend more to go into the direction of build. They would like just to have the technical components and then build on top of it. But in general, I would say security, hygiene, very important. What we also see is, right, that you have the capability to provide that as a SaaS service, because not every bank would like to build their own operation. That's an important dimension. And of course, also the business functionality. Can you actually provide all the tricky business processes which are in digital assets to the bank itself, so they don't have to build at their own. Plus, what you mentioned, that they can easily integrate it in core banking systems. That's from my perspective the important.
Okay. And last question to all of you. We see a different maturity with regard to digital assets in various countries. Of course, we know what's going on in Germany and Switzerland, but also in other European countries. Which countries are at the forefront of doing this, not just from a regulatory side, but also from an adoption side? Yeah, we also know it from Northern Europe, Estonia, and so on, that they did a hell lot in blockchain, but at the end of the day, not much has been sustainable, right? Or think of the blockchain island Malta. You know, where is it? It's gone somehow. So, what's your opinion on this regard? You know, which countries, which domiciles are nicely equipped with regulation, right? But at the same time, also providing a good reputation and potential adoption from market players, right? Peter, would you like to start with this question?
Yes, maybe it's a twofold question, right? From the regulatory standpoint, I mean, we have talked about Germany, right? We know Switzerland, Liechtenstein being really at the forefront from a regulatory point of view, then Singapore, and that's also where you do see some adoption in the, let's say, in the regulated financial service industry. But I just came recently over a study, which is also interesting, just from a end customer adoption perspective. Also, the maybe not so developed countries are picking up extremely fast. So certain countries in Africa, they do have an increasing adoption of digital asset or cryptocurrencies. Same in South America, just to bring in maybe a little bit a different aspect into it.
Interesting point. Andreas, what's your opinion?
I agree. In addition to that, we see that in US we see a lot of innovations as well. So it's probably auch a good play or a good place to start a business. So, but it's probably the same list: Switzerland, Germany, Singapore, maybe Nigeria, for example, and US.
Okay, and finally, Sven, you are also lawyer by background, right? So you have a very good judgment here. What's your opinion here, finally?
Yeah, I think I would distinguish between crypto sort of providing services versus can you distribute then these the products you create and to retail investors. It's quite interesting. If you take, for instance, UK there's a lot of service providers around crypto, but then the FCA at the moment restricts the distribution of these ETPs to retail investors, whilst Germany, for instance, wouldn't necessarily have that same restriction. So there's a different preference in terms of what you like to see to happen. Is it the production of these services versus actually distributing them? In that sense, whilst the US doesn't necessarily have, when it comes to security token, like a specific law change, it has a well-established private placement regime. Investors are comfortable with the model. There's existing market infrastructure that helps if your constraint is the distribution. And I think that's what we have all learned. I think we have now enough experiment in terms of how to create these assets, how to spin up networks, etc. But how you then achieve a distribution success and make sure investors can buy them. You have a liquid secondary market. That's hard because you need to bring a lot of people together. I would say the US is not, badly placed to pick up on this because there's enough depth in the traditional private placement market to pick up these kind of assets. So we have to see.
Yeah, excellent. That was very nuanced answer, but I think very appropriate. I think with this, let's stop for now. I hope we can discuss this discussion in a couple of months, because right now we indeed see picking up a market here with regards to digital assets in many countries, with many assets, with all kinds of types of assets, right? In Germany, we focus on debt instruments at this point of time. In Switzerland, equity is also allowed. So people are really experimenting very broadly what's happening here. And therefore, it's a very, very hot topic. In case somebody in the audience is interested to reach out, then contact us, contact Peter, contact Andreas or Sven. And with this, I think it's now best to wish everybody a nice rest of the day and rest of the week. Thanks much.
Thank you.
Thank you very much.
Thank you.